all, welcome to my channel. My name is Prajakta Bapat. In this series of videos, we are discussing basic accounting concepts. This is part 6. First 5 parts are already uploaded on my YouTube channel. So the first concept for today is goods. Now what are goods? Goods meaning commodities which can be bought or sold by a trader or by a businessman. So not necessarily it has to be a raw material or it has to be a finished goods. Any form of material which is supplied for money whenever monetary transactions are involved and you are doing trading in that is considered as goods. For example, Dell manufacturers, they manufacture computer. Now, for us, if I am buying a computer, if a student is buying a computer or a businessman, for him or her, it might be an asset because I am buying one computer or one laptop. But for Dell, they are manufacturing and they are selling out laptops or desktops. So for them, it will be goods. So whatever commodity is there, if you are selling or you are buying it, it will be considered as goods. Second one is receipts. Now what are receipts? So receipt is kind of acknowledgement. It is a document which acknowledges money is paid by the buyer to the receiver. It is a kind of proof. Okay, so it is issued to the payer. And by whom it is given? By receiver. It is issued by the receiver but issued to the payer. So normally whenever we pay cash or we pay in check, we get receipt of that. But nowadays in many occasions receipts indicate number of goods also bought and sold. It describes the items received. Okay, as you can see here, one example is given. Number of items, its price, total including sales tax, whatever amount is paid, and whatever amount whatever change is given, that is also mentioned. So this is called as receipt. Now next is purchase and sales. We are very familiar with these two concepts, purchase and sales. So whenever I as an enterprise, as a business or as a company, when you buy anything, whether it is on cash basis or whether it is on a credit basis, it is called as purchase. So it might be raw material, it might be a finished product bought for resale. Whatever things you are buying, whatever material, whatever commodities you are buying, that will be considered as a transaction of purchase, whether it is on cash basis or whether it is on a credit basis. And what is sale? So whenever any goods are sold out by an enterprise to the customers, it is generally called as sales. So again, it may be for a supplier of raw material, for him it is sale because he is selling out raw material to others, or for a supplier of finished goods, he is selling out finished goods to others. So for him it will be considered as a sale. Now what is purchase return and what is sales return? Now whenever you make any purchases, suppose we bought raw material from a supplier. Now maybe because the raw material is defective one, or maybe there are some it is not as per our order, as per our demand, so you may return those goods. Okay, you can return those goods, and when I'm returning it, you are returning it to the supplier. So goods are actually going out from your business. That's why they are also called as return outward. Many a times students are confused with purchase return and sales return, whether it is return outward or return inward. So how you will identify it, how you will remember it, ki when I purchase goods and I am returning it back, meaning I am sending it out, I am returning it to the supplier. So goods are going out from my business, so it will be considered as outward, return outward. And what is sales return? So when somebody has bought goods from me, that is I have sold it to the customers, so even they can return it to me. When they are returning me, goods are coming to me again, right? So it will be returned inward. This also will be recorded in your trading profit and loss account. Coming to the last concept of this video, cash and credit transactions. Again, these are very important concepts. So whenever, now this will be applicable only in case of, typically in case of purchase and sales only. This may happen in case of purchase or sales, not in case of other expenses. So if I am buying anything or if I am selling out anything, it can be on a cash basis or it can be on a credit basis. So if you pay cash immediately or if you receive cash immediately, it is considered as a cash transaction. And when you postpone the payment, when you don't pay cash immediately or when you don't receive cash immediately, it is called as credit transaction. Okay, so for example, if you bought any grocery from a grocery shop, okay, very small item, maybe worth rupees 100, so we can pay cash immediately, that is called as cash transaction. But when we ask for a newspaper, when we give contract to somebody like a daily giving newspaper at our home, right? So that is credit transaction, because we don't pay every day for a newspaper, we pay monthly bill. Or same happens with milk also, we pay monthly bill, so we are postponing the payment. Pura 1 month ka bill you pay at the end of the month, so that will be considered as a credit transaction. Now, how to identify? Okay, now as I said, it will be applicable only in case of purchase and sales and not other expenses. Because, for example, when I say I have paid salary to the workers, that means you have actually paid it. You cannot have credit transaction for salary. You cannot postpone the payment, otherwise workers will not work. That will be considered as outstanding one. So, credit transaction will be applicable only in case of purchase and sales. Now, how to identify that whether it is cash transaction or credit transaction? Now sometimes it will be given to you in the question that this is I have purchased on a credit basis, so you will easily understand, or it is purchased on a cash basis. If they don't give you such information, if you are confused, then how to identify? So normally 99.99% cases may, in the transaction, in the statement given, when they specify the name of the party, meaning either supplier or the customer. In case of purchase, it will be supplier. In the case of sales, it will be customer or debtor. So when they specify the name of a person, it will be credit transaction. Okay, and it is quite logical, because if you are paying cash on an immediate basis, then I don't need to know the name of a supplier or a name of customer, right? When you will record name of a supplier or customer, if you need to pay him or her something, or if you are going to receive him or something from him or her, then only you will be asking the name, then only you will be recording the name in your books of accounts. So whenever there is a name of a person, there will be chance that it will be a credit transaction. But again, you may have a one more thing here. If they give you we have sold out goods to Mr. A on a cash basis, so here you have a name of a person, but again they have given specifically on a cash basis, so that will be cash transaction. But normally, how to identify credit transaction? If the name of a person is given, that means it is a credit transaction. Let us stop for here today. Next video will discuss next concepts. Thank you.